What's going on, guys? Welcome back to another video. So in this one, we're going to be doing a little bit of an update on the potential banking crisis that we are seeing globally right now. We have Credit Suisse coming out with some more updates that you guys need to be aware of, and UBS is also seeing a very significant spike in their credit default swap premiums as well. Now, in addition to this, we have some really key economic data coming out tomorrow that you guys need to be aware of because it is going to be driving the majority of the price action that is going to be happening in tomorrow's trading day. So again, guys, before we get into all of that information, if you do enjoy the information and analysis that I provide for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot, getting these videos out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get over right here to the chart of the SPY. Now we're going to be looking at this on the 4-hour time frame here because we're seeing this painting of human emotion really starting to play out. We saw this significant bounce off the lows, which was the result of some shorts getting out of their positions in the overall market here. But we are seeing the declining bullish momentum on the MACD. We're seeing the RSI cross below its moving average going towards that 50-point range, and the ADX is starting to lose this momentum here as well. There's a couple of key support and resistance levels here that we need to be aware of as well, right around this 372.50. Then we're going to have that 380 level up here that is going to serve as another psychological level. And again, when we're looking at the technicals here, we have to understand what the overall context of this market is. As we've been talking about, in my opinion, I don't see really any reason why the Fed would pivot any of their policy right now and go towards essentially a less restrictive environment. And you even saw members of the Fed come out today and say, yeah, there's a very, very high bar and threshold for us to change the direction that we are taking our policy at the current time. So some of this run that we have seen to the upside was the result of investors thinking, well, there is a possibility for a Fed pivot coming up. But we're going to go over some more data on this. But the data that is coming out tomorrow is incredibly important. We have non-farm payrolls, but then we have the unemployment rate and average hourly earnings. Those two, combined with non-farm payrolls, are going to be incredibly important. If the unemployment rate starts to head higher, that could be an indication that what the Fed is doing is showing some signs of softening the labor market. Now, if the unemployment rate comes in a bit lower than expected, well, then the Fed is going to see that, and investors at the same time, that we're not necessarily even close to where we need to be yet, and more aggressive rate hikes will most likely be coming in the future, going into the end of the year as we get closer to that 4.5 to 4.75% terminal federal funds rate. Same thing with average hourly earnings. If people are getting paid more, well, then they have more discretionary income. They can provide more demand push inflationary pressure on the market, which obviously the Fed does not want. It's good for people to have disposable income, so they're able to buy the goods that they need. But the really screwed up thing about this situation here is that we are going to see the unemployment rate go up, and we're most likely going to see the average hourly earnings go down as well as the Fed tries to get these inflationary pressures out of our markets. Now, when we come over here as well, when we were looking at the potential for a Fed pivot, well, you have to look at the target rate probabilities for this November meeting. When we're looking at this right here, this bar is showing us the probability for a 75 basis point rate hike. That probability right now is sitting at 76.7%. So we have a 76.7% chance that the Fed is going to raise interest rates by another 75 basis points at the next meeting. This is not showing any signs of a pivot coming in the near future. Now, again, we are seeing this little relief rally in the overall market right now, but in my opinion, we haven't seen the lows yet. We still have a long way to go, and we aren't anywhere close to getting that light at the end of the tunnel in terms of when we could actually see a significant decrease in inflation and getting back to some of those longer-term growth targets that the Fed has for the overall economy. Now, I do want to talk about what is going on here with Credit Suisse. But before that, again, guys, we are going to be seeing a lot of volatility in these markets here. And if you do want to come to the best place to learn how to trade, make sure you check out that link down below. We have these proprietary algorithms, Pythagoras, Trader Joe, that are absolutely crushing it right now. An amazing community of people who have really taken that step and decided that they want to take control of their portfolios and not be beholden to anything, any kind of confirmation bias that we are seeing all across the internet today. So if you guys are interested, make sure you check out that link down below. But let's get right into this Credit Suisse situation right here, because this is starting to get pretty interesting. So Credit Suisse considering outside investor for the investment bank spinoff. The ongoing and potentially systematically threatening saga of Credit Suisse took another turn this morning, with Bloomberg reporting that the embattled bank is trying to bring in an outside investor to inject money into a spinoff of its advisory and investment banking business. According to people with knowledge of the deliberations, Bloomberg said that talks on reviving the First Boston name for the spun out business, which would get most of their revenue from the US, are also advancing. Now, when you think about this deal here, anytime capital is getting infused from an outside source, most likely means that the company itself is not able to fund this type of business venture. Now, it could also mean that they want to take on leverage to get some sort of leverage return on what they're doing with this spinoff here. But overall, with them essentially breaking up some of their obligations here, this is another development that I was talking about that we will see. And we have to see where this is going to go, but the fact that Credit Suisse is engaging in these types of actions here with taking money from outside sources to try to spin off their investment banking division are not necessarily the best signs. Now, the other thing that we need to talk about here is, remember, well, Credit Suisse's credit default swaps, we're seeing a very significant increase in premium. Now, what that means is that, well, supply and demand metrics are kicking in and more demand for insuring against the default of one of these large financial institutions. Now, UBS is seeing something very similar now too. UBS credit default swaps hit decade high after Credit Suisse blowout. The cost of insuring exposure to debt issued by Swiss lender UBS rose to a decade high on Monday after peer Credit Suisse was caught in the market spotlight amid concerns about its ability to revamp its business and bolster its capital. The 5-year credit default swaps rose by 12 basis points from Friday's close to 118 basis points, its highest level since 2013. Now, this is very possibly a lot of people funneling into the credit default swap market and essentially buying these lottery tickets or moon tickets to essentially have exposure to these financial institutions if they end up really facing significant issues. Now, one thing to look out for is once earnings season starts to kick off, the banks are going to be reporting at the very beginning of earnings season. So when we take a look deep into what these banks have actually been able to accomplish over the last quarter, we're going to get a little bit of a better insight into how these companies are doing financially. And that is really going to be the telltale sign of where things could go in the future. Are we going to see other banks start to see a drastic increase in the premiums on these credit default swaps? Or are we going to start to see these premiums come back down as people finally realize, well, there may not be as big of an issue as previously thought? So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening. I'll see you guys in the next one. Peace.